people go into this and maybe they are thinking they're going to figure everything out like that, right away in a day or a weekend or a week. My process took 3 years. Now, if you decide you want to come and learn from me, obviously your process will be shortened because you will learn my system. So it took me 3 years to develop my system. And I also didn't have anybody to go to and ask questions to, where you will have me to go to and ask questions to. So having a mentor really helps. I do appear on TV. If anybody see me on TV, I appear on Fox, mostly, and pretty much every channel. And if you have questions, you can email me at melissa@thestockswoosh.com or call me at 929-3200-GAP. And you can follow me on Facebook, YouTube, and Twitter, which is now X, at The Stock Swoosh. But like I said, it's fall. I mean, we're really getting into that time of the year where it's going to be a very busy time to trade. We have fall earnings season. We're at the end of the earnings season now. Then there's a couple weeks break. Then it picks up again in September. It's also a busy time. People want to trade and make money before the holidays. And on top of that, we have a lot of tariff deadlines that are coming up. Remember, the tariff deadline with China is November 1st. We also have a lot of drama going on with the Fed meeting in September. Trump now wanting to fire one of the Fed board members. Now she's going to sue. So there's lots of things going on into this period, which is going to make for some incredible trading. So you got to be ready to hit the ground running. You got to know what to do, when to do it, what type of trades you want to do. Again, I prefer to short, which we're going to talk about today. I mean, I will go long, but I actually do prefer to short. And again, whether you do day trades or options or swing trades or whatever type of trading you want to do, you have to have a concrete system to use and apply daily for success. And my main objective for today is to talk a little bit about what I do and the philosophy behind it. But I was talking about this in the trading room today even. One of the things that makes me unique is I actually have a system that I apply, a method daily, which is the rating system that I use, which I'll talk about a little bit more in a bit. And I don't skip it. I don't fudge it. I use it, okay? So I'm using it on a consistent and daily basis. I do it myself, okay? And it's not something that you can't understand or comprehend. It's not like you're reading a financial report and you're coming up with an analysis or decision. It's based off of technical analysis, and it's technical analysis in a gap. And again, that's what we're going to talk about today. So one of the reasons I started trading was I wanted a different job. I wanted a different career. And if that's you, then that may be one reason why you want to trade. But then again, a lot of people just want to trade because they want extra money on the side. They're not doing this full time. They like their job. They like their career. Maybe they're retired. But they just want extra money because things are costing more. I don't care what anyone says about inflation. To me, as a consumer, I really, in general, think that prices have gone up. Yes, eggs have gone down from where they were, 6 to 12 months ago. But overall, I'm seeing prices creep up a bit. Now, that could be because of the tariffs. And what is that going to mean for the future? What's that going to mean for 2026? Will the economy get to a point where we go into recession? Financial freedom really means peace of mind. And it doesn't matter what age you are. You don't have to be like, well, I just want to relax and retire and have peace of mind. People want peace of mind at 35, where people don't want to have to worry about paying their bills. And they don't want to have to worry about 10% tariff bump in things or whatever it ends up being, whatever you buy goods and services. So again, it's great to think about having all kinds of money to go on vacations and buy nice things and all that's true, okay? And luxury goods items, going out to nice dinners, buying fancy cars, that's great. But at the end of the day, we want really to be at peace. We want peace of mind. We want less stress in our lives. And when we have less stress in our lives, we make better decisions. we sleep better, okay? We don't age as quickly, and we have better relationships with people, and we're just, calmer. And so I think people kind of lose sight of this again as well when they start to trade. Everybody wants to trade and they want to get rich, and you see all these videos online and all these things. That's all well and good, okay? But it really comes down to peace of mind, I think, more than anything, because then you can weather the storm of a COVID era. You could weather the storm of a recession, of higher interest rates, of high inflation, or whatever the cost may be. You know what I'm saying? Does everybody agree with me? Everybody hear me? I see some people coming in late. Again, if you have questions, you can plop it in the room, and I will see them as we go along. I'm the only one that can see the questions. So I did put the room results for the trading room in here year to date. This doesn't have the last 3 days or 2 days in here. 850,321 for the year. My average risk is about $4,000 per trade. I bumped it up slightly this year, and this is going through again till last Thursday, which was 8/21. We did Walmart, and I have that trade in here. So again, these are all day trades. You would have to be in the room to get these trades. These were trades I did live in the room. I call the entry, the stop, and the exit. And if you want to do these trades, you need a margin account. Now, again, as I said at the beginning, you could do options if you want. I have an options newsletter. We will discuss some of those trades in here today. But some people are doing my day trades as options. Now, I'm not. So if I do a trade, if I short Walmart and I'm shorting it, I need a margin account to do it. So again, that's something that you have to call your broker, figure it out, whatever you want to do. If you want to do, trade on margin, that's fine. If you want to do options, that's fine. But again, if you're in the live room, you're going to get the calls, and you're going to be able to do the trades in the room with me. So year to date, and again, this is only through last Thursday, there were 200 trades, 121 winners, 77 losers, and 2 break even, with a win ratio of 62%. And I do use stops. I get this all the time. I use stops because if the trade doesn't work, I want to get stopped out, even though it means I have a loss. Unfortunately, there are some trades that are going to lose, and I don't want the loss to totally get away from me. So I put the stop in so that I have a fixed risk in the trade. And we can talk about that when we talk about some of the trades like Walmart too. So getting back to what I was saying, how can you make your dream of becoming a successful trader come true? You have to have a plan of action. And one of the most important pieces of the puzzle is you need a trading strategy. And you can't just have any strategy, because there's lots of strategies out there, and there's lots of people selling different programs, even where the computer will take the trades and they'll enter the trade and put the stop and do all kinds of things. You have to have a set strategy that has more winners than losers. And you have to size yourself consistently, accurately as well. So what do I mean? Let's just say you took, 4 trades. If you risked $100 on one trade and it worked and you made 100% and you made $100, and you took 3 other trades, okay, and your sizing was off, you could actually have like a 75% win ratio and be upside down. If you did 3 winning trades and 1 losing trade, and you risked $100, $100, $100, and then the 4th trade lost and you risked $1,000, you wouldn't be able to recover, even if you had 3 positive trades of 100% win ratio. Because why? You'd be up $300 and you would have lost $1,000, and then you would be upside down $700. You follow me? So it's extremely important to size yourself right as well. And I don't think that it's really a big deal as far as mathematically trying to figure out sizing. I mean, for me, I'm one of those people that can do math very quick. In my head, it's only algebra. It's arithmetic, but you can figure it out on a calculator. You can take your time. You can take 100 shares, and then if you realize you can take more, you can add in the trade, okay? Or same thing with options. You can buy 1 contract, and then you're like, oh, wait a minute, I can take 4 more. Then just buy 4 more. Then you have 5, okay? So again, one of the biggest things is you have to have a good strategy. And not only that, you actually have to use it. You have to use it. Again, we're talking about this in the room today. So you can do my class. You can sign up for my class, which we'll talk about at the end because I'm doing a Labor Day special. You can sign up for the class and you can learn the whole shebang. But if you don't actually do it, if you don't actually do the work yourself and do the work, then you're not using the system. Then you really aren't giving yourself the chance to succeed and make as much money as you could. And again, the whole point of trading and why you're doing this is you're risking money so that you can make money. You don't want to just risk money for the sake of risking money. Okay, that's how and why I created the system in the first place. So, it comes down to it that you have to find high odds trades. And I've said this before in other webinars actually. If you look at all the trades that you have on any given day, most of the trades that are out there that you could take, or most stocks that are out there that you could take trades in, there's nothing to do. They're not good trades. They're not predictable. They don't have any reliable target unless you've got the market direction with you or the market's power trending on the day, whether it's up or down. There's really not a level of accuracy in the trades that you could predict. So I developed a system based on stocks gapping, which we're going to talk about a little bit. And not only am I looking for stocks that gap, I'm also looking for certain criteria in that gap. And if I see it, I will take the trade in the direction of the gap. And if I don't see it, then I won't do the trade at all. And it's just that simple. So again, if you come and take my class, this is the most important piece of the puzzle. It's a checklist. And like I said, I do it myself. I do it myself every day. If I wouldn't do it, I'd be trading blind. There'd be no point. And this is the crux of what I'm trying to get at here. If you have a dream of becoming a successful trader, and this is something that you really want to do, then you have to take actionable steps towards how you're going to make that dream come true. You can have a dream, and it could be a real dream, but it's a fantasy pie in the sky dream that's never going to go anywhere unless you actually take actionable steps to actually do it. Part of those steps, or one of those steps, would be to take my class and become a student and learn it. Then what's another step? Actually doing it after you learn it, not skipping it, not just coming in the room every day and just following me and not doing it yourself. Even though lots of people do that, I encourage people to rate the gaps. That's the point, okay? And then on top of that, okay, following and actually trading. Now, if you're new and you're like, I want to observe, I want to trade in a demo, I'm scared to do it right away, I'm learning, I'm new, that's fine, okay, that's fine. But at some point, you have to dive in and trade live too, okay? And again, you could do that with a beginner size. I showed you my results, which is an average risk of $4,000 a trade. I consider that an advanced size, but you could risk $100 a trade, $300 a trade, $400 a trade, okay? Any questions here so far? I see some people coming in and out. Anyways, one of the biggest trades in the last week was PLTR, which is a trade we're going to go over. We did some day trades, we did some options in it. But again, how did I know to do the trade? How did I know it would sell off? We did actually 2 options in it that both worked huge. They were crazy trades because they went far, far, far to the strike into money. And the second one, actually, I called so far away from the strike, and went at the time that I called it, it was almost shocking that it went there, which we are going to go over. So again, how did I know that? How did I know that? Am I a psychic? No, I'm not a psychic. But I have a rating system, and I use it. And it tells me that the stock is going to either rally or fall. Now, we're talking today about shorts because the class I'm doing in September is the bearish gap class because I'm mostly short. I'm mostly short. Most of the gaps that we do are bearish gaps, which we'll talk about. And one of the reasons I prefer to short is because stocks fall much, much faster than they ever rally. So here was the first PLTR. Actually, let's look at the trade. On 8/14, This was late for me, but I did a trade 11:38 in the afternoon, 8:14. We did the PLTR 180s that expired the 22nd. Okay, so that was last week. So let's go back. So 8:14 was here. Everybody with me? Take it up. Boom, boom. So again, stock close here, gap down. Take it over. We did this basically snug as a bug, a little bit above the strike right there. So you would have bought the put. If you were on the options newsletter with me, you would have bought it. Okay? And again, it expired the 22nd. And here's what it did. Boom. 1, 2, 3. Could have got out here. Could have got out here. It was a beautiful trade. I got out here. Anyways, this went all the way down, broke 160, broke 180, broke 170, broke 160, broke 150, almost broke 140. It was crazy. So this was a huge trade. So again, this is an advanced trader risk. What if you took one? You could have taken one. You could have risked $325. Okay. So again, this is buying the put and selling the put. So that's what I'm doing. So I'm buying the put to enter and selling it to exit. Everyone understand that? Again, you would have to have an options account to do this. So the cost of the trade of the day that we did it was $325, which wasn't crazy. It wasn't bad at all. Okay, for the price of the stock. Again, 30 contracts. I'm risking an advanced trader risk was $97.50. Sold it at $35. An absolute ridiculous trade. Was almost 1,000% return on investment, $95,250. So again, let's say you took one, and I'm just giving you here an example, what you would have made if you took one. I don't think I have it in here. If you risked $325 and just did one trade, and anybody have any questions as I'm going over this here? If you took one, which is effectively like 100 shares. Everyone understand what I'm doing here? Everyone understand options? You only pay the cost for the trade. Does this make sense? You would have made over $3,100 risking only $325. That's a good trade. That's a good trade. That's a good return on investment trade. But again, maybe you risked 10. Maybe you risked 3,000. Maybe you risked 5. Maybe you risked $1,500. Okay? The whole point is, if this is something that you want to do as your career, it's part-time hours, because the market isn't even open 8 hours, for one thing. We mostly trade in the morning. That's when I do the ratings. That's when I do the prep work. That's when I'm running the room and trading in the morning for the day trades. But most of the options I call are actually in the morning. Now, this was late, 11:30, but it's not like you're sitting at your desk staring there for 8 hours. You would have bought this put, and you could have put a sell order if it went somewhere that particular day, which it didn't really go that first day. And you could have just put a sell order to get out that day or the next day, or you can watch it, and I have targets in the newsletter, and you just follow it down. This fell so fast and quick through the strike, though, that's why it was such a huge return on investment. Now, is every trade that I take like this? No, that would be totally unrealistic. But there are trades that I do. And getting back to the chart, how did I know this would do this? Because I rated the gap, okay? And the gap rated good. So what did that information tell me? It told me that PLTR, again, we did a put is a short. It told me that PLTR would fall. Because the only way you're going to make money if you're short or if you buy a put is if the stock drops or the market. Just like if you want to go long, okay, the only way you're going to make money going long is if you buy a call. Again, the stock has to move up, the price has to move higher. Any questions here so far? But I never go long a bearish gap, and I never short a bullish gap. So I'm always taking the gap in the direction of the gap, but I'm not shorting every gap down, because not every gap down falls. And I'm not going long every gap up, because not every gap up rallies. In fact, I'll just quickly show you here. Meta. This is just a good example. Well, now let's go to Microsoft. Can everybody see Microsoft chart? Hello. Is anyone there? Is anyone alive? I have Microsoft up. Rick says yes. Dan says yes. Kafui says yes. Okay. So this is a good example because Microsoft had a bullish gap and we did not go long it. Because if we had, we would have lost. I can tell you that. The day of the earnings, the stock closed here at 7:30 at 513.24 and opened all the way up here at 555.22. So we didn't go long this. If we had, we would have lost. If we had done it for a week or even 2 weeks, we would have lost. This was back at the end of July. If we had bought calls on this, we would have lost. In fact, I'm not long this now. It's not even a long here. Okay. Again, could you theoretically have shorted this or bought it, put, made money? Yes. Obviously. Why? Because on the day of the gap, the stock fell off a cliff. Okay, it fell $20 plus. But I still didn't short it or buy a put because it could have moved up. To be honest with you, it could have kept going. To be honest with you. It didn't, but it could have. All right. So I never go against the direction of the gap. But again, I just want to clarify, you can't just short every gap down. It's not that easy. Now, a lot of people trade gaps. Let me go back over here. Can you see that? A lot of people trade gaps for gap fills. That doesn't work as something to consistently make money. And the key is consistency. That's the key to establishing and getting to the point of creating your dream to be a reality. This is, again, a lot of things that people just forget. You know, it's like if you have, it's like if you want to lose weight and you want to go on a diet. Well, it's going to take time. It's going to take, you can reach your goals. You can lose however much weight you want to lose. You say, well, I'm going to go on a diet between now and Thanksgiving because after the holidays, I'm never going to diet. Or lots of people go on diets in January. That's what they do after the holidays. But you need a plan. Okay. You need a plan to lose the weight. Now, I get everyone's on this drug now. Everyone wants to lose weight quick and fast, but there's risks to doing that. Some people are having health risks to doing that. And, you know, again, there's other problems along with that too. So you're taking higher risk. You can't get away from the fact that if you take a trade, you're risking money. The risk is implied because you will not profit or make money unless you actually take the trade and risk money. There's just no way around it. And I know there's some places out there, there's some places that fund people and they say, well, if you meet this requirement and this requirement and this requirement and this requirement, we'll fund you. I don't know if anybody's heard of those places. There's a bazillion of them out there. They're popping up like toadstools lately. But they make the requirements so difficult, so hard, so crazy that almost nobody can meet the requirements. And then people just basically waste their time, and you're basically trading then on a practice demo doing it. And then sometimes people charge for those accounts. So you got to be aware of that too. So there's really no shortcuts. Again, same thing with the diet. There's really no shortcuts. But if you don't have a plan of action to make it happen, you're not going to get where you want to be. I mean, look at what I was saying about the fact that it's Labor Day almost in it's almost September. I can't even believe it. In 4 months now, it'll be 2026. That's insane. A little bit more than 4 months. The year just went like that this year. And so if you say, well, it's going to take too long, I have to do the class, I have to learn it, I have to practice, I have to rate the gaps, I have to do all this. If you do that, time goes so quickly. Time passes so fast and so quickly, it's not going to be that long of a time till you get it under your belt once you learn it and start doing it. But the farther off you put to learning it, yeah, then it's the farther off it's going to be until you learn it, till you do it. You know what I'm saying? Any questions here? Anyways, you need the right tools to be successful, and you need those tools to get good results. And for me, it is the rating system. I do it. I do it every day, and I never skip it. So again, I've been trading since 2008. It took me about 3 years to figure out and develop my system. And so I've been doing nothing else since then. I've just added to my size positions and added to my risk year over year. But the Golden Gap rating system is a very useful tool because it takes away the guesswork of you trying to get in your head about what to do. When you see yourself, and you know this if you've traded, if you've ever taken one live trade in your life or you've been trading for years, you know this. Or even if you never traded, if you did something else with, I can give other examples. You start to get into your head, you start to get crazy, and you start to overthink it, and then you're second guess yourself and you're questioning it, or you're trading in fear, or you're like a 50-50 crapshoot, and then you start to be like you're going to do the gambling, and then you're doubling down. You know what I mean if you've been doing it. You got to get away from all that craziness, okay? Get away from all that craziness. You just go back to the rating. You rate it. You say, okay, this rates 22 points, that's it, I'm doing it. If it sets up, I'm doing it, okay? And you decide the risk. And all you have to do is decide your risk and make sure your risk is the same on every trade. That's not about number of contracts, though. That's about dollars and cents risk. Because, again, some options we do might cost $1. Some options we do might cost $5. So you can't take the same number of contracts. So if you're willing to spend $500 per options trade, you could do one of one, or you could do 5 if it costs $1. Follow me? So it is not about the size of the position size, it's the cost of the position size. Does this make sense? Anyways, here was another PLTR that we did. We did it on the 19th. Let's look at this one here. Let's look at the gap. We did the 160s. Again, completely insane how far away it was at the time that we did it. And again, you could actually, we'll have to pull this up. I think you could have still been in this trade this morning and actually been up money, but I'm out of this trade and I don't know why anyone would still be in it. The 29th is technically not till Friday. But anyways, I called this a week ago. Last Tuesday, the 19th, here we go, 10:47 in the morning. PLTR 160 puts. Let's take it over. 819 was here. Boom. So stock close here, gap down. I called the 160s. It went, fell off a planet, gap down here, fell off a planet. Again, no one should still be in this trade, but technically, this morning, the stock was still under. The stock was still $5 plus in the money with 3 days left. Now, I don't know why anyone would still be in this trade. It was, options you trade, you get in, get out with the profit. Day trades you trade, you get in, get out with the profit. I'm a momentum trader, but this is another great example. Again, how did I know this would go? Again, I rated the gap. The day of the gap was the 19th. So that was a week ago. Okay. So this particular ticker, this particular chart, ended up being such a just such a beautiful short last week. We could have done more, actually. We could have done more trades in it. 475 was a cost. Again, it was already getting going here by the time we did this one, so this was a little bit pricier than the first one we did, which was earlier in the week or the prior week. 20 contracts for $9,500 risk, sold at 18, 26,500 profit, 279% return investment. What if you did one? What if you took one trade and risked $475? What if you took 10 and you risked $4,750? Again, you could have made over 13 grand. Now you would have had to be willing to lose $4,750. But do you see here how you have a couple good ones like this and your month's getting going? And then if you lose in some trades, these winners will not only get you ahead, but cover the losses. Okay? And that's why you got to stay on track. And that's why you have to do the ratings. And that's why you have to get serious about it. And I'm not talking eat, breathe, or sleep charts, 24/7. First of all, the market's only open Monday through Friday. We're focused mostly on trading in the morning. Okay. If you can't watch what's going on in the afternoon, again, you could put a sell order. You check your trades back before the close or at lunch. But in the moment that you're trading, in the moment that you do it, in the moment that you decide you're doing this at 10:45 or 9:30 in the morning or whatever I call the trade, you are on point. You are like you're gonna cross the street in New York City, and even though you have the light, it doesn't matter. You're still looking right, left, right. Right, left, right. Because there's e-bikes, and there's mopeds, and there's bikers, and there's crazy people, and there's dogs and cats and taxis and all kinds of things going on all over the city. You still have to look where you're going, and you still have to think, and you have to be on point. And again, it's somewhere along the line, people get confused. They get in their head at this dream of being a trader, which is great. And I had the same dream when I started out too. And I was just like 99.99999% of the people out there. In my mind, I unrealistically thought I was going to do it and make millions of dollars right away as soon as I did it. And it didn't turn out to be that way. Now, was I surprised? No, I wasn't. I was disappointed when I realized that, oh, this is actually going to take some work, okay? And then I buckled down, and it took me 3 years, like I said, to figure out my rating system. But you have it so much easier because you can come and just take my class and learn mine. And you may have a learning curve. How long that will be, I don't know. Could be a day, could be a week, could be a month. Could be between now and the end of the year. I don't know. But the whole point is you're on the right path once you get the nuts and bolts down and understand why I was able to see that PLTR would fall to call a trade 20 points away from the strike, which this, I mean, for have this be, to have it call it $10 away from the strike and have it drop $20 in the money. I mean, makes sense? Any questions here while I am talking? Any of this making any sense at all? Dan has a question. Dan said it is. Like, if I could go back in my life and redo my life, I probably would have started trading right after college. But I didn't know anything about it. I just didn't know anything about it, and I didn't know anything about it at all. And I just didn't know. And again, I wanted to change careers. When I was doing mortgages, I wanted a different career that had an unlimited income potential. And I made the shift, but it was, at a point in life where it was a lot harder to change careers than it would have been if I would have started in my early 20s. The thing that is interesting to me now is that people still, to this day, even despite COVID, when a lot of people shifted careers or lost their jobs or had to find work from home stuff, or people were working 2 jobs and things like that, people still have a challenge sometimes changing careers, like just 100% doing something completely different, but you've got to do it. You've got to do it. If you want to get this down, you don't really have a choice, because it's like either continuing to do something that you're not happy with or you're miserable, or figure out how to make the change and how to make the shift. Again, I went to college. I went to undergraduate school. I went to Gettysburg College, and it was a good college. It was a good school, but I got out and I didn't have a job. Now I look for a job, like everybody else. But nowadays, colleges, people are doing internships, and they're trying to get jobs before they graduate and trying to set up all this stuff, ahead of time. Yeah, that's all well and good if it works out that way, but it doesn't always work out that way for people. And you've got to be flexible and learn to change and do different things, and you can't be scared to do that. And you can't then hate the world and hate life and hate the market if that's your path. Do you know what I'm saying? Like, if that's your path, then that's your path, and just say, okay, I'm going to do it. And I'm determined to do it. And damn it, I'm going to make it. Do you know what I'm saying? When I started out, I never forget this. I got involved with some prop place and went to them for a little while. They charged crazy commissions. This is a long time ago. A lot of places don't charge commissions now. Some still do, but most places are free commissions. It was a prop place, and they were giving me, I don't remember, like 20 times the buying power or something. I had to fund it. I had to put up my own money, but they were giving me a lot of buying power. And the place was in New York, and I met the guy face to face, and I had an office and stuff, even though I traded from home. And the guy was like, I didn't know what I was doing. I had no idea what I was doing. I didn't figure any of this out yet. I was so green. And he said, "You're going to make it." I said, "Well, how do you know I'm going to make it?" Because I was really down. I think I had lost that week or something, or I don't know. I didn't know any of this stuff then. And he said, "Well, you're going to make it, Melissa. You're tough. You're tough. You know, you're determined. You're going to make it. You're going to figure it out." And he was right. You know, he was right. And again, I think what happens is people realize, yes, this is possible, but they think it's just going to come without them doing any work. No, it's not going to come without you doing any work. You're actually going to have to still do the work. You're going to have to do it every day. Whether it takes you 20 minutes or 30 minutes or an hour to rate the gaps, you're still going to have to do the work. You get up and you do it. You get up and you do it. Again, just like if you're on an exercise program or if you're on a diet or whatever, got to get up and do the work. But you should do it in joy and excitement. And for me, I had no idea on this particular day, whatever day this was, like I had no idea last week we were going to completely fall off a planet like we did. I mean, I sort of had an idea. I started talking about the prior week, and I said, I think this is the high for a while in the market. And I was talking about, I said, I think this is the turn. And we were in some stuff early, but I had no idea last week was going to have as many big trades as it did. So sometimes things actually end up being better than you expect once you accept what the reality is to achieve your goals and dreams. Does that make sense? Once you get on a firm footing, then things really can take off. And then things really start happening for you. When you're in la-la land, in totally unrealistic land, they're never going to move forward with you. Do you know what I'm saying? Like, and that's where I think a lot of traders are as well. They're kind of in la-la land about how to go about it, what it takes, what to do. That they even have to take a class like mine. Do you know what I'm saying? Any questions? Rick says it makes sense. Okay. So why do I like to short? Panic. Again, the market sold off a lot last week. Panic selling. I'm just seeing here now we had a rally today, very, very late in the day, which is kind of crazy for two reasons. One reason we had a rally late in the day was because, again, the Lisa Cook said she's not going to step down. She's going to sue. And two, there's talk that ExxonMobil now is talking with Russia oil lines because they may be making a deal now to get back to work together, that there may be some kind of Ukraine-Russia deal, which the market would like to see that happen. Now, whether or not that transpires, I don't know. That was very late breaking news into the close as well today. So there was a couple of reasons here why the market had a push up. But in general, I prefer to short. It's not that I'll never go long. And last week when we shorted, we got this big sell-off that came right down in here. In fact, again, we were in it early. But if you just look at the 2 big days, we're at 576 and we dropped all the way down here to 558. So it was almost a 20-point move in 48 hours. That's quick, that's fast. So panic can come in very, very fast and much quicker than buying. Even though buying comes into the market and we go long, like I said, panic comes in faster. Okay, and so basically selling comes in faster. So I prefer to short. I also know that many people have no idea how to short that are trading. So it kind of gives me an edge, and it doesn't kind of give me an edge, it does give me an edge. It gives me an edge because I know how to do something that a lot of people don't know how to do, and we're often in trades early like we were in those puts prior to the sell-off into last week. So again, how do I determine what the big money, the institutional money, the smart money is doing? I use my tools. It's a rating system. Again, it's based on technical analysis and gaps. So what do you need? You need a chart. You need day charts. You need the 1 minute chart. You need the 5 minute chart. You need the daily. You have to set your charts up, and that's what you need. So you can have a trading account anywhere in the world as long as you have live charts and live data. at a level 2, and you could do it. And again, you have to have your account set up right. If you want to do day trades, you have to have a margin account. If you want to do options, you have to have it set up to do options, okay? And I get up and I do the work. So again, do the work in joy, make it exciting, because this is like any other job where there's work involved, okay? There's work involved, and part of it is the work that you do in the pre-market. You're getting ready. Any questions here so far? So this was another beautiful, beautiful sell-off here in Walmart. Just going to go back. I don't remember what day this was. Thursday. Walmart closed here, gap down. It had earnings. Okay, stocks gap for lots of reasons. This happened to be earnings, and it fell. Fell off the planet here. And actually, this was still falling today. Crazy as it may seem. We did a day trade in this here, and we did a put. And you could actually still be in this. I know, that seems crazy, but you could, okay? So I just want to show you, again, selling, panic, pressure. And he said, well, why did it sell off, and why is it still going, and why is it falling off a cliff? Again, who knows? Who cares? I'm reading it in the chart, and I read it in the chart that the price action was going to push Walmart down. And that's all I care about, and that's all that matters to me, that the price is going to drop so I can short it or buy a put. And again, you could say, well, it's because tariffs are affecting Walmart and the Chinese tariffs and everything. Maybe. I don't know. I don't have time to listen to the earnings reports. You can do that if you want, but there, quite frankly, isn't enough time. And you don't need to. And sometimes you get a beautiful report, a fabulous report, and the stock sells off. Sometimes you get a terrible report, and the stock makes brand new all-time highs. So you can't always, look at one or the other and come up with a conclusion. The Golden Gap course is 2 days, September 20th and 21st. Is that what you're asking me, Dan? Yes, it's 2 full days with a 1-hour break for lunch. Anyways, here was the market. We just looked at this. Again, close here, gap down, fell off a cliff. Close here, gap down, fell off a cliff. Now, we're snug as a bug right up in here as we speak here. We're lifting tonight. Now, for those of you that trade, you know there's a big earnings tomorrow night. It's called NVIDIA. It's a big company. They manufacture chips. So a lot of people have opinions. A lot of people think they're going to be up. Some people think they're going to be down. Nobody knows. But one thing I do know is it will affect the market. So if NVIDIA is gapping up on the earnings Wednesday night into Thursday morning, the market's going to be up. If NVIDIA crashes, the market's going to crash on Thursday too. Now, what if NVIDIA gaps down and flips and rallies? That could happen as well. And then maybe I don't even trade it. So NVIDIA could actually fall on the earnings and then rally. So you don't know. So again, that's why you do the work. You do the work. You do the work. You do the work. And you do the work in the morning. So again, sometimes gaps happen at night, but I don't do work at night. I wait till the morning because things can change. And actually, very often, things do change. So I find gaps and I rate them using a checklist. Again, how do you become a successful trader? Get a plan. Do it. Take it seriously. Again, this doesn't mean you're reading charts night and day, but it means for the 1 hour a day or the 2 hours a day that you're trading, yeah, you are taking it seriously. Gaps have to be qualified. The checklist tells you what to look for in the price of the stock. And that's how I make the determination if it's going to move up or down. So I'm really trying to follow and focus on institutional money. If the big money's going to come in and buy this market and keep pushing it higher, then it's going to keep making new highs, regardless of tariffs or regardless of interest rates or regardless of anything at all. So again, who knows? But big momentum is big money translates into the big money translates into big momentum, which creates big moves in stocks in the overall market. And again, a rising tide lifts all ships kind of thing. Many times the market will lift or push down stocks. Okay? So I might do a different thing every day. It's just whatever we get. But this is a very interesting time because, again, we're watching the market closely. And last week was a week where there's a lot of opportunities to short because the market fell. And I had predicted it would fall, and it worked out that way. There's other times we've gone long. It's just, we're not long, though, the market right now, I will tell you that, because I don't know what NVIDIA does on Wednesday night. Now, here was another one we did, 8-6. Okay, let's take a look at the gap. Stock closed here, gap down, open, rallied, dropped. This was SMCI. It also kept going every day, almost practically since the day. Boom. Again, this was 8.6. We shorted this 47.30. Again, it was a short. It was a short. $1.25 out. Done. Boom. 46.05 was the exit. Made 43.75. It actually kept going. So I could have held it and made a little bit more that day, to be honest with you. But again, my goal in my day trades where I'm shorting shares, like I had 3,500 shares of this, is to get in, get out. Get in, get out. 2 minutes, 3 minutes, 5 minutes, 10 minutes out. When I'm doing an option, I will take a trade and try to hold it to get a fatter move or a bigger move, which could be in one big fat day, or it could be in a series of days. 1, 2, 1, 2, 3. Okay? But I'm not holding trades that I'm up until the last day of expiration, unless I'm up, I'm in the money some crazy amount. And even then I really don't, because it's too risky, because the trade could reverse. Any questions here so far? So my system is how I make the picks. It's a very useful tool because you could use it for options, you could use it for swing trades, you could use it for day trades, whatever you want to do. Because I'm just looking at the gap to determine the direction. Once you can predict the direction something's going to go, how you decide to take it is up to you. How much you decide to risk is up to you too. Okay? I use this tool each morning to determine what stock to trade and when. It is a very useful tool in any market. Takes away the guessing games, takes away trying to worry about Trump tweeting or what somebody's saying in the news. You don't have to get in your head about it. Okay? It's a useful tool, but particularly in this type of market where you can really get sucked into all the breaking news and all the tweets and everything that's happening. You can go berserk. You can think things are going one way 1 minute and the next day it reverses. You don't want to be like that with your trades. That will create anxiety for you. And remember, we're trying to get to the point where we're relaxed and we have peace of mind. And again, it's a tool that can help you decide if you should exit along too. You know, so you could rate the gap and then you can determine if you want to actually get out of the long. And it takes the guesswork out of your trading. And that helps too. So again, you can use it to short, to enter a short, or exit a long. Okay? Like we were talking about the Fed earlier. You know, I was surprised that the market was not up today a lot this morning because of Trump wanting to remove the one Fed governor, but now she's going to sue, and the Fed pretty much made a statement. They're pretty much ignoring what Trump said, and somehow we rallied on that. So again, these are very interesting times, but I don't trade the news. Am I aware of it? Do I know what's happening in the world? Am I sure? Yeah, that's fine. I mean, I know what's going on out there. You can't ignore things that are happening, but I don't say I'm going along the market because Powell's going to drop rates. No. Do you know what I'm saying? Now here was another one. We talked about the Walmart. This was we shorted it 98.45. 3,000 shares risk was 43.50. Exit was 97.38. This was a nice trade, 32.10. Good little trade in there, snug as a bug, fell, and that was another short. So again, in order to become a successful in the market, you have to become an expert, a specialist in one specific strategy. Now, you might say, well, I don't know if I want to do your strategy, Melissa. Okay, then you got to find another one. The point is, you're not going to ever be successful doing this and actually get serious about doing it if you can't find a strategy that you can use every day. If you have 5, 6, 10, 25 strategies, you're going to be all over the place, and you're never going to become an expert in anything then. So again, I've been doing this and nothing but this for so long, and mostly shorting, that I've become an expert. When I started out, I just gravitated towards shorts. And I very quickly gravitated towards gaps because gaps have big moves for the most part, like you're seeing in the Walmart, like you're seeing in the market, like the PLTR. So I choose to do this because I'm looking for big moves. I'm looking for institutional money, or what I call power money in the market. This brings momentum and opportunity, And it's a skill to read this. The skill can be acquired through education, and that's how you learn. And you gain the skill by doing. It's not just taking the trades, it's doing the ratings too. It's going back and looking at your charts and say, this worked. Oh, I see why this worked. Or I see why this didn't work. Or it went to this target, or it didn't go to the target, or it went past the target, or whatever. Again, the constant analyzing stuff, I personally find fun. I love reading charts. I do. I really do. Some people don't, but if you don't like technical analysis, I think it's going to be tough for you to make it as a trader, because reading price action is what really is going to tell you where something's going to go. Because like I said, the fundamentals do not always match up. Sometimes they do, but they don't always. And actually very often they don't. Okay. Any questions here? So like I was talking about trading education, you know, it's important, because if you don't know what to do, you're gambling. I mean, that's just a fact. When I started out, I was basically gambling. Far too often, traders don't understand exactly how important education is. It is okay if you don't understand something. It's okay to ask for help. It's okay to admit you don't know. You could see, like, I don't know, I don't understand. That's okay. It's okay to admit it, even if you're trading and you're losing, that what you're doing isn't working. That's okay too. And sometimes you will make a mistake. You'll make a fat finger mistake and you won't understand something. You can't beat yourself up. It's a learning process. That's why I tell everyone, start out slow. Risk small size. Go slow, because you don't want to do a fat finger mistake just because you're new. But the sooner you come to terms with reality, if you're losing money, that you don't know what you're doing, if in fact you're trading and losing, and the sooner you come to terms with the fact that you need help and you need education and you need a foundation, the faster you could turn it around. You could be down for the whole year, for the first 8 months of 2025, and then trade the next 4 months and turn it all around and be positive for the year. You could actually do that. There's plenty of time left. And you could start now and see some gains and headway between now and the end of the year. You can turn things around very quickly. And that's why you can't blow up your account in 1 day or 1 week, or just if you have a bad trade or a bad day or make a mistake. You can't get so frustrated, you know. And so again, sometimes things happen that we don't expect. We're in a trade, we're up, it flips against us, we didn't get out, we lose, that happens. But it should never be the end of the world. It shouldn't blow up your account. It shouldn't mean that you quit. You have to look at this as a long-term venture. Not that it's going to take you a long time to do it, but that you're on board. And you're like, okay, this is it. I'm doing it. Boom. I'm going to figure this out. I'm going to understand it. I'm going to analyze it. I'm going to do the ratings. Okay? But the meat and potatoes of everything I do is a checklist. It's a 26 points. And this is the reason I'm successful, actually. Because there'd be no way I could predict all the trades that I do that I've won in and got right accurately and called for others to do with me, like I showed you in the stats at the beginning. There's no way I could do that many trades, just even in 2025. This isn't even going back prior years. There's no way I could call and trade and win that many and predict this is going to go here, this is going to go here, this is going to go here, that many times over and over and over again if I didn't have a method to do it. It's not just willy-nilly me. It is that I am utilizing the checklist. Today in the room, we rated the gap. We sometimes do ratings. We didn't do any day trades today. We didn't do any options today. We did a gap rating in the room. Every time I do a rating and we do a review in the room, people love it. And that's great. But it kind of reminds me, like, where I'm saying to myself, okay, these people, everyone should be doing it every day. And it's kind of funny because I think people do log in the room and they just don't do the work. But if you do the work, you're going to be like, oh, gosh, darn it, I see that now. I should have held that PLTR, or I should have done that second one. I only did the first one, or whatever. Do you know what I'm saying? It helps you take the trade, hold the trade, get in the trade, exit the trade. You know what I'm saying? When you understand, when you know what to do, when you know what to look for. Otherwise, again, you're blind. You're blind as a bat. And that's the whole point of learning something. So again, you need a winning strategy to be successful. Like I said, mine is golden gap. So let's talk about the basics. What is a gap? A stock gap, so the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple. So almost everything gaps every day. That's the fact. It's very rare that something will close at 32.02 and open at 32.02 the next day. It would be a neutral gap. Something closes at 32.02 and opens at 32.05. You can say, well, that's a gap up. It's a 3-cent gap. Am I going to rate it? I don't know, maybe. If it closes at 32.02 and opens at, or gaps down and opens at 31.99, that would be 3 cents gap down. Could you rate it? Sure. But again, it's the idea that most stocks gap every single day. Somewhere, something. But not all gaps are predictable or tradable. And not all gaps are being made with institutional money. So you have to determine who's in control, the bulls or the bears. That's what you have to determine. Again, looking at, go over here, this one. PLTR, okay. Who was in control? The bears were in control here. The bears were in control. And you could say, well, the bulls were in control today. Well, yeah, we rallied. We had a green bar. I get it. Okay. But anyways, I didn't play this. I said, well, why didn't you go long there? It was green. It gapped down, actually. Want to be honest. Stock closed here, gap down. So I'm not going to go long this either way. You could have never predicted that this would do this. You said, well, how did it do it? Well, the market rallied, so it just rallied with the market. So I'm not doing that. And then you would have had to predict, okay, what the market was going to do today, which you wouldn't have been able to do either. Again, there was a lot of stuff going on this morning and a lot of stuff going on today with news that the market could have acted, bullish or bearish or whatever you want to say. Well, let me get back. And any other questions? My class is good. I'm explaining it well. Okay, good. Anyways, you have to get the direction right to win. Again, this sounds very simple, but it's true. If you get the direction wrong, you're going to lose. So you got to get the direction right more than you get it wrong. Because if you get the direction wrong more than you get it right, you're going to lose. Even if you size yourself correctly and equally, even if you get out in the trades that win with profit, with good targets, if you can't get the direction right enough, you're going to lose. This is the biggest challenge for a lot of people. Yes, sometimes people have trouble with sizing and where to exits and those kind of things. But in general, I'm generalizing here, most people, 99% of the people that trade the U.S. stock market get the direction wrong in whatever they happen to be trading. They get the wrong pick, and they get the direction wrong in the pick. Follow me? So anyways, let's talk about what is a golden gap. A golden gap is a gap that rates 20 points or more per the Golden Gap 26-point rating system. You take the trade in the direction of the gap. You can do the trade as a day trade or an option. Like I said, you can do it however you want to do it, or both. So I like to do both, but that's just me. So again, how do I determine who is in control? I rate the gap. This gives me a daily focus. 1 pick, 2 picks, 3. How do I know ahead of time where stock will go? I rate it. I use a 26-point checklist. This checklist tells me what to look for and what to trade and what to look for every single solitary day. Here was another one we did last week. This was the QQQ puts. We did the 570 puts, another great trade. We did this on Monday. Before we fill up a planet, 818, let's take a look at the chart. 818 was here, boom. Closed here, gap down. We bought the 570 puts, take it over, boom. So we were right here, snug as a bug, around 575, 576. And then we went dun, dun, boom. And we fell. You see that sell-off. So we were short, and we were short before the big sell-off. So these were crazy cheap. $1.70 for one you could have paid. You could have actually paid, I think the lowest price was like $120 or $115. It was something ridiculous. 50 contracts, risk was 8,500, sold at 1050, was a huge trade. 518% return on investment, $44,000 profit. What if you did one? Well, I mean, again, how much do you want to risk? Whatever it is, it should be equal, even, Steven. But you could have done 10. You could have done 10. You could have spent $1,700. I know it's not nothing, that's not small, but you could have done 10 and you could have made over 8 grand. So that's a good trade, okay? And again, one trade like that, that's your week, you know? Oh, I did have a beginner in here. Oh, here we go. I did put it in. 6 contracts. Well, I'm using 1,000 average risk here. If you did 6 contracts, 1,020, sold at 1050, you could have made $5,280. That's huge for someone with a small account. With someone with a $10,000 account or a $5,000 account, that's a nice profit. Okay. But again, what happened last week was you had selling. So the big position players in the market, the big money in the market sold off. Again, you can say, why? Why, Melissa? Because it just did, okay? So if you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction, get out after the move happens for profit. But you have to understand how to trade with a side of power, and you need to know how to find it. That's what you learn in the class with the Golden Gap class of the 26-point rating system. Knowing how to read what institutional money looks like is essential to becoming a successful trader. And the benefit is that you can win big trading on the side of power because you're going to get big moves, because the moves that are happening are elongated, fat, sell-off bars. Because again, when people dump stock, it's usually for a panicky reason. It could be multiple reasons. It could be earnings. It could be a Trump tweet or tariffs or whatever. But it's usually panic, panic, panic. And by the time the selling comes in, it's like, woo, it goes like that. And again, that's why these are such good calls, because we're in already before it goes boo. Because again, if you're not in it, you look away, you're like, oh crap. And it's already in the money. And then you're not paying $1.70. You're paying like $6 until you see it and you get it. So again, you got to size yourself and be in the trade and get it and do it and just play the trade out. But it's all about the focus for me. I mean, there's so many people that I talk to. I do webinars all the time. People are all over the place. I just can't believe how all over the place people are. I mean, I can and I can't. I can believe that people are over the place because it makes sense why so many people lose the trade. I get it. But at the same time, I'm thinking common sense should tell any normal person, just normal, average, regular, everyday person, common sense should tell you, you're never going to get good if you're all over the place. You're never going to get good if you don't have a focus. You're never going to make a lot of money or any money at all. You're going to lose if you don't have a focus. You have to have a focus. You have to have a system. I cannot stress that enough. And people are just too jumping all over the place with different systems and classes and things and genres, and they never get good. So again, why did I get into gaps? Because they have big moves. Gaps are the most powerful show of price action in a chart. Gaps have large moves, period, end of story. That's why I like to do them, and we do them when we get them. Gaps can move up or down. Some of the biggest momentum moves in a daily chart come from a gap. When I trade, I'm looking for and trading momentum. Then whether you have a small size or a large size, you will get a good risk to reward. And I said don't push it, because you can start out with a small size, and if you're doing well, you can push it up to a bigger size. Like now, we're getting into, you know, the end of earnings season, Labor Day holiday, come back, Fed meeting, then we start the next earnings season. I would say if you're going to start now, go slow, and then you could bump up your risk like October 1st. Like I'd say give yourself a month with a small risk. Get in, do it, practice, bump it up October 1. Earnings season begins, you get into the groove then, and that's what I would suggest. But again, it's all about the rating system. You will learn to rate gaps with the 26-point checklist, and you should be doing it every day. Or, I mean, if you are late one day, you're busy or something, that's fine. But for the most part, you should be rating gaps, and you should be going through the process, because that's how you're going to get good at doing it. And it shouldn't be work. It should be fun work. You should be like, oh my God, I'm so excited today. I have this good gap. I can't wait to rate it. I think it's going to rate really good. And if it does, it could go to a piggy target, and I could make a lot of money today. The thing that gets me out of bed every morning is excitement of making money, which I don't even know how much I want to make. It is still exciting to this day to make a lot of money to me. It could be $20,000, $30,000, $90,000. Every day that I make money is exciting to me. If it's $3 grand, if it's $2 grand, if it's $552, there's so many people that are losing. I am not. And when I make money, it's exciting no matter how much the amount. And obviously, the bigger amount, the more exciting it is. But when I get up in the morning and I see a good gap, like I get up and I see Walmart, I said, that's it. Boom, we're doing it. And it's exciting. So you're never going to be bored trading with me. I'll tell you that for sure. The room is not boring. And again, I try to make it as interesting and informative as I can. But the rating system helps me determine who is in control. The bulls or the bears. If the bears are in control, that's where you want to be. Because a big flow of money going in a certain direction is what moves the market. Stocks creates momentum and sets the trend in charts. When you're looking for institutional money, you're really reading the side of power in a stock. You want to be on the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times, even if you think it's not, it is. And this is where the skill set of reading price action will really help you and aid you in doing it. And then again, you want to focus on quality. If there isn't any good gaps, you don't trade. Like we didn't do any trades today. There wasn't any good gaps. Hopefully we'll get a good one tomorrow. For sure we're going to get some good ones Thursday and Friday. But again, I get up, I rate the gap, do the trade, get in, get out. I chunk it out. You log into the room, even if you're doing options, I say log into the room, hear my commentary, hear what I have to say about the market, hear what I have to say about whatever options we're doing too. But I do like day trades, the fast trades I showed you like in the Walmart and stuff like that. I love doing trades like that because it makes me happy to know I have XYZ amount of money booked, I'm out. Then I can be more relaxed in the option. I can give the option a chance to work and take its time. And so I like to do both options and day trades. But if you want to do one versus the other, that's totally up to you. But in the room, I'm calling the entry, the stop, and the exit for the day trades. Okay? And again, you don't have to trade all day, which is also a plus. So gaps happen in the market on a regular basis. However, some gaps are better than others. Some gaps are nothing gaps, like I showed you some of them. And then some gaps are very powerful displays of institutional money. The most important gaps in the market are gaps that signify a change in direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. That is how you know when the power of money will flow to pay you. And then it's easier to make money. Again, when the sell-off came in last week, it was like free money and we were in the right stuff that happened to go big. But the panic that came in was full throttle. And again, you said, will we rally today? Will we ever panic again? Of course. Again, we do different stocks all the time. We're not always doing the market. Sometimes we do other stuff. But it's the point that you never know what you're going to get whenever you're going to get it. And again, the idea is to look for the big ones. We want sell-offs, okay, if we're shorting. And we want quality gaps. But you want to be consistent. You want to think intellectually about it. It helps you do well in any market. So if you want to learn the system, it tells you how, what, and when. How to make money in the market. Trade a strategy and system that is profitable. Golden gaps are highly profitable strategy because they focus on large momentum to trade. What stocks should you trade? Stocks that gap and rate 20 points or more per the Golden Gap 26-point rating system. You will trade the gap in the direction of the gap. It doesn't matter if you do a swing trade option or day trade. You got to rate it first. It's got to be 20 points or more. When do you trade them? Early in the morning, into the open when they set up and trigger. And you must have a structure in place in order to make any money at all consistently. It is about the consistency that many traders lack in their systems. And many traders don't have any systems at all, which was my point to start with today. You must have a system in order to be successful. And it also has to be something that you can use on a daily basis, even if it takes work to sit down 1 hour, half an hour. I don't rush to get ready in the morning. That stresses me out, to be honest with you. So again, if you have limited time, I'd say sit down at 8:30, no later than 9. Market opens at 9:30 if you want to prepare. So again, it measures gaps. The system measures gaps by rating them in the daily chart to find stocks to trade that have, number one, a high probability of directional bias for the entire day. Big move in the day, like the Walmart, like the market we did, like the PLTR. Early confirmation of the bias in the move between 9:30 and 10, and precise entries with follow through and a good risk to reward target potential, which, I think 1-to-1 is good. Now, again, I'm not saying I never get out of options 50%. Sometimes I do. Certainly depending on the holiday or the time left in the trade, or if it's a Friday going into a weekend. Again, you know, there are times where we get these massive trades, 500, 600, 900%, but that's not always planned. You know, I may rate a gap in the morning and say I really like this, but I don't know it's going to go 1,000%. But I do then as the trade's playing out in live time, because I'm reading what's happening, because I'm reading the price action in live time, because I have experience doing that. And that's why it's important to understand what's going on and to have charts, okay? So put a plan of action in place if you want to be successful. Do the work and make it fun. It should be fun. Train only golden gaps are rated according to the 26-point rating system, that you have a high rate of success in your directional bias. That's key. Very important. Get the best entry you can with precision early in the morning to get a good risk reward trades. Again, many of these options we're in super duper early, and we're in day trades early too. Create a money management plan for yourself to achieve your goal of becoming a professional trader and achieving your goal of working for yourself. So I would say, again, you can do this over the holiday, the Labor Day holiday, whatever. Come up with a plan. Like if your goal is to build your account up to a certain amount of money so that you can risk more money, so that you can make more money, then you need a plan for that, okay? If you're starting it with a big account, then you just set the risk and move forward. But if you have a small account, say I want to grow this account to this size, and then grow it to this size, and you have to take steps. You have to take steps to do that, and then you get a plan. You get a plan to do that. Any questions to anyone here so far? How are we doing? Everybody doing okay? Any questions? Dan's doing great. Hopefully Dan, you'll do the class this year sometime. But you were closer to realizing your dreams than you think. You really, really are. This is real. You can do it, okay? You need to follow your dreams and think about what you're doing. And again, you know, it's one of these things where you have to write it down. I'm very big on writing down, making lists and writing plans. Get organized. And I'm just using it because, again, we got 4 more months left in the year. We have the holiday weekend coming up, and then we start September 1st is Monday. We got 4 more months left in the year. I would set goals for yourself between now and January 1. And then you look at your goals at the end of the year. Say, okay, these are my goals then for 2026. Do you know what I'm saying? So the system I use is called the Golden Gap. It's a 26-point checklist, and you go through it, boom. And you rate it, and you follow the rating system, and you log into the room, and you listen to what I have to say, and hopefully take the trades with me. You need conviction to make money, and you get that from understanding why. And again, this is why education is so important. And I just cannot stress enough that to make your dream realistic, you have to understand what's going on in the chart, in the price action. You must understand why. You're never going to understand why or be able to predict something that happens with tariffs or whatever. But you can read the live price action when it's happening. And that is something you can act on, play out, get in, get the move, get out, and profit on. Again, we're not long-term investors here like we're buying a stock or shorting a stock for 25 years from now. That's not what we're doing. We're active traders where we're trading momentum, where we're getting in and we're getting out, okay? And again, using a 26-point checklist is key. So empower yourself today. If you're interested in doing it, you can learn a complete system. My class is in September, but you can join and start trading with us now. Oops, sorry. And my class is called the Golden Gap Course. It is a full course on how to strategically find, pick, and play stocks that are professional bearish gaps. The class is September 20th to 21st, 9 to 5. Cost of the class is $69.99. You will learn how to find, pick, and play professional bearish gaps. Class is online. Could be anywhere in the world and take it. And I'm doing a Labor Day special for the bundle, which is $89.99 and includes 3 classes: the Golden Gap, the Trends, and the Gap Options class. Again, all classes are online. All classes are in September. And the Labor Day package is going on through September 1st. If you sign up for the bundle by the 1st, you will get the Options newsletter free till the end of next year, which is a huge amount of time. It's basically 16 months of trades. The room, same, free until the end of next year. The market report, free until the end of next year, and 2 one-hour mentoring sessions with me too. This is a huge package. You get all 3 classes, and it's $89.99, and this offer ends on Monday. So this allows you to do all the classes in September, start trading, get all the subscriptions. If you need the mentoring, then after the classes, you can have them too. And again, this is a Labor Day package, and it's $89.99, and it ends on Monday. Some of you I recognize, some of you I don't recognize. If you've been following me for a while, if you're new, if you have any questions, let me know. How's everyone doing? I saw your brother here, Dan. Is he trading or is he thinking about joining? Wow, he's thinking about joining. I know you said he was thinking about joining last year. Is he trading right now? Oh, he's never traded before. Yeah, well, if he has questions, he can email me. The bundle is a good deal. The bundle is a good deal. CJ, no, you've been following me for a while. Now, if you have questions, Eric, you look new. James, I don't know if you're ready to come back. I see you there. Kapui, how are you doing? The video is tomorrow night, but I don't know what I'm doing with it because I have no idea what it does. You don't know. You have no idea what the Fed's going to do, and you have no idea what these earnings are. You can't place stocks into earnings. That would be crazy. Again, trust me, you can have everything in your head, like, I know this is going to be up, it's going to be up, everyone loves NVIDIA, and then it crashes. So don't be surprised. I won't be surprised no matter what it does. I'm just saying, I think we're going to get some good setups this week. Kafumi's doing great. That's good. Listen, here's my email. Put this in here. If anyone has questions or you want to sign up for the Labor Day special, email me. You must email me for the forms. The one last takeaway I'll give everybody here tonight is do the work. Do the work and the money will come. Because again, your dreams are realistic, but you have to be willing to do the work. And again, there's a level of commitment to do a 2-day class, which is a whole weekend. It's a weekend you can't, have fun with your family, whatever. There's a financial commitment to spend the money for the $89.99 for the package. You got to get up early in the morning, depending where you live. It's earlier than others. And you got to rate your gaps, prepare for the run, log in. But the benefits of the, far outweigh the commitment. And so, this was something that I was always back and forth with when I was trying to figure everything out, and it was taking me a long time. I said, this is totally going to be worth it, totally going to be worth it, totally going to be worth it, and it was worth it for me, The Trends course talks about long-term trends, which is good for day trading or options trading or swing trading, actually. And that's Tuesday, the 23rd. Again, before you know it, it'll be the 20th. But again, your subscriptions begin as soon as you join. So if you want to join and start trading, you can get the trades this week, and then you do the classes in September. Listen, have a great night, everyone. Have a wonderful, wonderful evening. If you have questions, email me at melissa@thestockswoosh.com.